My warm greetings and felicitations to our colleagues from the ASEAN countries who are with us today in the conduct of this year's ASEAN Insurance Regulators meeting. I can't believe that it has been a year since we first held our annual meeting through virtual means. In that span of time, many things had transpired and lots of challenges came our way. Nonetheless, I am still grateful that the insurance industry has remained firm and is generally faring well despite the catastrophic effects of the pandemic on the global economy. In the Philippines, we are just about to wade our feet into the new normal as our COVID cases have seen a sustained decrease over the past few weeks. Despite the good news of declining cases, we remain cautious and on the lookout as we gradually reopen our economy. Still, we can assume that our entrance into the new normal is imminent. The COVID-19 pandemic is indeed one of the greatest challenges of our time. It has caused a plethora of loss and business interruptions and brought waves of challenges that rippled across various industries. As a regulatory body, the Philippine Insurance Commission recognizes the fact that the insurance industry was not spared from the adverse effects of the pandemic. To accommodate the needs of the industry, the Commission has promulgated various provisions and amendments to ease the burden on the part of the companies and to ensure the continuity of movement, function, and compliance within the industry. Let me now discuss some of the supervisory developments in the Philippines. First, the deferral of the implementation of IFRS 17. Prior to the pandemic, the insurance industry is already served with various challenges and issues on its plate. One of these concerns is the implementation of IFRS 17 on insurance contracts. Honestly, the implementation of IFRS 17 is quite challenging and laborious as it requires substantial investment in accounting systems, IT-related infrastructures, and human resources. Given the situation we are in, the Insurance Commission understands that implementing and complying with the said standard will be much of a burden to our regulated entities. The Commission recognizes the industry's need to focus more on recovery efforts and adjustments to cope up with the adverse effects of the pandemic. As an answer to this need, the Insurance Commission issued Circular Letter number 2020-62, deferring the implementation of IFRS 17 on life and non-life insurance companies to 2 years after its effectivity date as decided by the International Accounting Standards Board. On March 17, 2020, the IASB decided that the effective date of IFRS 17 shall be deferred to annual reporting periods beginning on or after January 1, 2023. It implies that the said standard is projected to be implemented on our country beginning January 2025. The Commission hopes and believes that this will give our regulated entities ample time to recover and eventually to comply with the given standard. However, those that are ready and willing to comply with IFRS 17 may do so by January 2023. On the online submission of reportorial requirements, health protocols and travel restrictions compelled us to rely heavily on the use of technology and other platforms that support remote communication. As such, the Insurance Commission opted to employ digitized means of dealing with our stakeholders. Through Circular Letter 2020-59, the Commission has required the online submission of annual statements, audited financial statements, and other reportorial requirements of our regulated entities for reporting period 2019 and onwards. The online submission and paperless transactions is also a way to minimize the potential risk of transmitting the virus. Prior to this, the Commission had also issued various circular letters moving and adjusting the deadlines for the filing of financial reports, as we understand that the restrictions in travel and business operations pose specific challenges on the preparation of such reports. Next, on the matter of remote selling of insurance products. To ensure business continuity in our industry despite the social restrictions, the Commission had earlier allowed the use of remote selling of insurance products through the use of ICT and other technologies that support remote communication. Recognizing the significant benefits derived from this, the Commission, through Circular Letter number 2020-109, decided to institutionalize the remote selling initiatives as a permanent mode of selling insurance products even after the COVID-19 pandemic. The insurers must, of course, adhere to the set of guidelines and standards provided by the said circular in order for them to continue the remote or online selling of their products. Such initiative will allow our industry and business operations to move forward while maintaining our people's exposure to a bare minimum. This move will also help protect the safety of the public as well as that of our agents and industry practitioners in the field. To better maximize the online platform, insurance companies tap into the online insurance market to distribute their products and offer more seamless customer experience. Several insurance companies launch products through their own e-commerce platforms, others through online marketplaces, and mobile wallet applications. As a side information, allow me to share with you that remote selling initiatives by our insurers have proven successful. As of the first quarter of this year, with total premiums earned by our life and non-life companies and mutual benefit associations increasing year-on-year by 27.81% from 1.53 billion US dollars to almost 1.97 billion US dollars. On the matter of e-commerce on pre-need and HMO products, health maintenance organization products. As you might know, the Philippine Insurance Commission regulates and supervises not just the insurance industry, but the pre-need and HMO sectors as well. Another recent feature of the Commission is the issuance of the guidelines on the electronic commerce or e-commerce of pre-need and HMO products. The selling and e-issuance of pre-need and HMO products through electronic form offer consumers new and substantial benefits, convenience, and access to a wide range of products and services. With this issuance, we enjoin the pre-need and companies and HMO providers who are engaged in e-commerce to pay due regard to the interests of consumers and act in accordance with fair business, advertising, and marketing practices. On the matter of online agents' computerized examinations. On the same note, the Insurance Commission also recognizes the important role of our insurance agents in keeping our industry alive. This prompted the Commission to issue Circular Letter number 2020-69, which granted temporary license to the qualifying agents who were unable to take the examination. With the restructuring of the agents' computerized examinations and the issuance of necessary rules and regulations in the conduct of such, the validity of the temporary license granted to new agents was shortened until November 15, 2020. Earlier this year, we have issued Circular Letter number 2021-15, which sets the terms and conditions governing the conduct of online agents' computerized examinations. The examinations are being held through virtual means in 3 batches with 25 examinees per batch. As the condition of our country starts to get better, the Commission has promptly issued a circular 2021-40 to further increase the capacity of our online agents examinations. The number of examinees per batch has been increased to 50 examinees, yielding more number of examinees who successfully took the licensing examination. Next is the matter of regulatory sandbox framework for InsurTech innovations. With the industry's continued reliance on the use of technology, especially in this time of pandemic, there has been an increasing need to provide an environment for the testing of new technologies. Therefore, the Commission issued Circular Letter number 2020-73, promulgating a set of guidelines on the adoption of a regulatory sandbox framework for InsurTech innovations. The regulatory sandbox would provide the controlled environment needed for the small-scale and live testing of InsurTech innovations. This would give us a better understanding of the opportunities and risks in utilizing these innovations and their implications to the financial sector and consumer protection. We have also issued a similar set of guidelines for the adoption of regulatory sandbox framework for technology innovations in HMO and pre-need products. On the matter of online insurance aggregator, in 2018, the Insurance Commission issued Circular Letter number 2018-51, defining an online insurance aggregator and providing the guidelines for their licensing and regulation requirements. With its internet-based platform, insurance aggregation, whereby a customer can find price or premium comparisons of insurance products in the aggregator's website, is ideal for our new circumstances and thus deserves encouragement. On other digitalization and cybersecurity efforts, With the emerging need to cope with highly digitalized business environment, the Philippine Insurance Commission has converted most of its existing manual operations into streamlined and internet-based processes for safe, easy, and fast transactions. An online uploading system has been established and utilized to absorb the surge of online submissions of reportorial requirements from our regulated entities. As of this date, we still opt for the online submissions and technology-assisted transactions in order to minimize the exposure and prevent the possible contagion of the virus. In line with this, the Commission also encourages the adoption of digital payments in transactions involving purchase of insurance, pre-need, and HMO products. To protect our systems from cyber attacks and data breaches, we regularly conduct an encryption and cybersecurity hygiene training for our personnel and regulated entities. We also require all of our divisions using the uploading system to use secure passwords and strictly implement the encrypted submissions of all financial documents. On top of these precautions, the Commission is preparing to institutionalize an incident response mechanism as part of our cybersecurity resiliency program. The main goal of this mechanism is to improve our security infrastructure in terms of network, hardware, and applications. In closing, as the wonders of vaccines take effect on our population and our people get used to the health protocols, we gradually enter into the new normal. Many of the innovations we have introduced will surely continue to be with us as we settle into this new way of doing business. I hope I was able to impart something useful in as much as I learned from your experiences. It is in this exchange of lessons and thoughts that we will continue to be strong as a region and industry and valuable to our stakeholders. Together, let us all work for a vibrant and resilient insurance industry in the ASEAN region. Thank you to all of you and stay safe, everyone.